Okay, hello everyone. One um, one more video for you guys on trading gold. I'm not a financial advisor. You can read my disclaimer right there at the bottom. And let's just go ahead and start. Today I want to talk about um, mainly one thing, which is in regards to past videos of the footprints in markets, but more importantly, when we are looking for what type of footprint. Because it's one thing knowing what the footprints are, and it's another thing knowing when they are effective for what, right? So let's get into it. You guys, if you are new, welcome. I'm gonna leave somewhere over here a link to my past video. At the end of this video, I'll leave two options for you to start watching. I trade gold, and I only talk about how I interpret the market. So here, what are the footprints? If you're new, again, footprints, you can go back in my videos, but just to make a summary, I have a few rules within my strategy, which are wicks, like this one, or this one, and like the ones that you're seeing currently forming. We'll get there in a second, but that's one. And the other is the A shape and V shape types of, like this is an A shape. This is the 4-hour time frame, by the way, on gold, and this is an A shape because if we zoom in on, say, the 30-minute time frame, and we go back to where we saw that, is like an A. Okay, so these are key things to look for in the market. Okay, I think if I highlight it, I can find it better. I'll show you real quick. 30 minutes. We have to zoom out. There it is. Zoom in. There's your A shape pattern that now when I was saying at the beginning, when do we look to identify these patterns? That's a very good question, because as you can see, there are A shapes and V shapes everywhere, but the the power of this is to learn how to wait and see and spot them during the right conditions and for the right purpose. Meaning, the condition could be a downtrend or an uptrend, and the purpose would be to buy or to sell. Now, if the market is going down, is falling on a downtrend, like it has been doing so here, this is gold, it's been falling, 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 we're obviously going to spot many A shapes, like this one, A right there, I mean V shapes, I'm sorry, V shape, there's another V shape right here, you see? But if you think, if you want to counter trend trading, that's going to be a mess. Because here, according to that strategy, that's a V, which means buy. But that's not always the case. It's more effective to spot A patterns during downtrends and V patterns during uptrends. I'll repeat that so you can take notes, and I'm going to write it down here in big. Look for A patterns during downtrend. Look for, I'm going to put them with shapes, because actually they're shapes. V shapes, uptrend. Okay, that is the secret to the strategy. Well, there's no secret, but that's the powerful in it. Okay. And if you realize that's quite effective throughout all of this, okay? Take a screenshot because I'm gonna delete that soon. So here is an A shape during a downtrend. A shape during downtrend right here. Okay? Boom, boom. Another A shape during downtrend right here. Right there. We have to zoom in. There. Another question would be, what time frame do I look for these? Between 30-minute tops and 1 minute. But they're very effective during 1 minute. Look at this. Boom. A shape. Continues falling. And the reason is because that's liquidity grabs or stop hunts, whatever you want to call them. But point is the market needs to make pullback. And usually they make a strong pullback and then a strong rejection. And rejection actually means the fact they have entered and grabbed that liquidity, so therefore they're continuing. Okay, so here we get to the present, and it's a whole disorder. Right now gold is going nuts, and the reason is because it's reached a very low historical low on a very strong psychological level, which is 1815. Another footprint, and I'm giving a lot of information away, but this is awesome. But it's for you to learn and write down a lot of stuff. Psychological levels on gold are multiples of 5. 1815, 1810, 1820, stuff like that. You see what happens around these prices? Many orders coming and go. Now, what are we looking at right now? It's just, I mean, I would say, many of you would say manipulation, hedge funds, institutional trading. I mean, yeah, of course, everybody's trading. But there's a big week coming up, and I've published this on my Instagram, but there's just a lot of speculation on what the outcome of the economic calendar is going to be like. And that is non-farm payroll. Non-farm employment change, I'm sorry. So the NFP, you've heard of this, every Friday, every first Friday of the month. And as you can see this morning, the jobs openings came out positive for the US, which means negative for gold. That's why you're seeing this in red, and that is why here you see metals. But if you switch to Forex, then you clearly see that number in color green because it's positive for the US dollar. You see that green? So again, the US is getting stronger. The US dollar, the currency is getting stronger and stronger and stronger. So gold just has to keep coming down. It's their negative correlation. Okay, so what happened? People are trying to anticipate this. And so many are saying, wow, well, gold is already at a pretty low level. It needs to grab liquidity higher for it to continue dropping if and when these numbers start making sense. And the numbers would make sense if they keep coming out positive for US, therefore in color red, negative here for metals. Okay, so here's where you mix a little bit of fundamentals, news, and technical, more like chart and price action patterns and analysis, and you start asking yourself, does it make sense, and what are the probabilities? So, does it make sense that this number was negative for gold, and that the chart is behaving this way, right? Does it make sense that there was a 1815.3 minimum price here, and is it making sense that it's coming all the way up here? Like, what's going on? You see, so these are the things that I start asking myself, and you're trying to, it's a game of figuring out what's happening and what could happen. But mostly is what are the probabilities of A or B of the outcome of A or B, and which has less risk. But that's risk management, and that's another topic. So I'm just gonna keep going and speaking out loud to you guys. So I ask myself this, and I see, well, market keeps breaking up these resistance points, but then it turns back to break support areas and goes back to the top and breaks resistance areas and back down. And there's a book called the technical analysis of the fundamental markets. No, technical analysis of financial markets. And I remember this very clearly, that they illustrate what price manipulation looks like. And that is these constantly breakouts, constant breakouts of support and resistance areas, or liquidity areas, or order blocks, or offer, demand offer, however you want to call it, supply and demand, however you want to call it. The point is, price here is very choppy, up and down, and we don't know what's going to happen, right? So what you need to do is just have patience and wait. Um, okay, sorry about that. Now, what can we start to anticipate that we could start doing? So I'm just gonna say to myself, okay, based on what has been happening macroeconomically wise, all these numbers and the behavior of gold up until now, because look how gold had been coming down pretty much like steadily. Any pullback, continuation, pullback, continuation, pullback, continuation. Now it's reaching a point in which the market is just consolidating, maybe finding it's finding more orders. That's what's happening. Okay, so that's what I'm interpreting right now. The fact that many people, A, had their stop loss over here when they were coming down. So in other words, you have a sell, you have a short position. People are moving their stop loss down, 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 down. Whenever market makes a pullback, there you close. They're in profit. So that's a buy stop. Um, and then there are sell limits up over here as well. So all this liquidity, that's why the market in the beginning made this interesting and strong pullback to the top. That also reflects as people having their take profits and buy orders down over here. Reason why market bounced up, it entered, it grabbed all that liquidity, made that rejection, made that discount. So now we have we have a tug and pull between people that think that gold has reached the bottom and it just has to start coming back up higher, and that is why these candles are rejecting to the downside. Down, boom, big order, right? Big order. But then again, you have people that think this is a pullback and that it has to continue falling. A lot of sell orders here. So wick to the bottom, wick to the bottom, rejection. So you see, this is a big I mean, if you're not a risky trader and you're very conservative, this is a big no trading area. I personally like to trade these big movements, but in and out, scalping literally. However, now let's try to be a bit more rational and analyze the market even more and see and map out key areas. A key area for me would be this: the fact that the market has been respecting that price level with these candles, the bodies, notice how the bodies don't close below each other, but they're closing right at that price. You see? So that to me is one variable and one factor to go long that is making sense and it's evident. And as you can see, we have that rejection to the upside immediately, but let's keep waiting because we want to see what happens at this price specifically, where these bodies closed right next to each other and where these bodies pretty much closed at that price and where this wick was, and that is exactly 1829, 100. It's a psychological level, 1830. Psychological level, 1830. I'm going to mark it right over here. Okay, so that I want to see what happens. I want to know what happens there. Right now, I know that this is happening, that this price is getting rejected and respected, this support. I also know, and I also see one of my footprints that are in my strategy, which is wicks, the long wicks. And where are the wicks? That's also another topic of this video. Why and when are we looking for those wicks? Well, we had been coming down, so the wicks would make sense on the upside. Like this big wick, this one, right? Notice how there's no more, there isn't major wicks at the bottom. Here it was because it had a rejection at a key price. I bet you this is probably a psychological level. Let's see, 1857. Well, doesn't make as much sense, right? So this wick is the one that counts, and so on. Here now, what's happening? I see a strong rejection. The market has respected this support. It broke that structure that had been coming down with being pullback, respecting resistance, continue breaking support. The market fails to make a lower low. It stops and it shows this rejection with this big wick here. So that wick to me, to my interpretation and my understanding, is just liquidity grabs of all of this area to go higher. And why does it want to go higher? Well, not only does it have to, if it wants to keep going down, right? Not only that, but we could anticipate some of the news. So, if the news has been positive for US dollar, negative for gold, therefore gold has been coming down. If we anticipate that, if our analysis and our projection is okay, I'm going to stick to the idea and that's going to be my plan, that's going to be my goal to short gold even more. Now, when am I going to do that? Well, let's wait. History has been telling me, in regards to the unemployment rate, that it's been kind of choppy for both, but generally speaking, we have a positive news for US dollar. I'm gonna switch it here so you can like understand it, I guess, a bit better. But notice how there's been many green numbers for US, and their economy is getting stronger if you read the news and blah blah blah. And I mean, it's all fake to my, I mean, it's just, yeah, there's people spending money, yeah, but hey, they're making another bubble. But let's not get into that. What I'm trying to say is we are seeing that there has been positive news constantly for US dollar, US economy. People are leaving gold, they're selling it, they're just, taking profits with when they were when they have been long. So it makes sense for gold to be making this in Spanish it's recuperación, recovery. It's making this recovery up to grab more liquidity to continue falling on the longer term, or maybe even make a double bottom, right? Somewhere somewhere like this, I mean, this is not my projection per se, but that's like the rough idea of what could be happening right now. The fact that it wants to go up over here, grab even more orders, and a stronger liquidity to break or retest this lowest low. And for this, of course, we need to even go further out into the weekly chart, but we can do that in a second. I'm gonna I'm gonna keep analyzing the market here, even though it's a very challenging task and doesn't make much sense because it's going up and down, up and down. But these are, in the end of the day, these are clues. These are things that you can see happening. So I can see price failing to break this support, and when I mean break, it would have to close under that. So all I see are wicks, wicks that come in and back out, in and back out. So that's just, I'm just saying, okay, well, it's not showing me strength to the downside. It's actually showing me strength up. It's rejection. So anywhere from where this candle was to now, the price is gonna probably retest this area, psychological level of price 1830, maybe even higher to 1835, because that's what it's been doing. It's been breaking its previous ranges, up and down, right? So that's just one way you can see it. Now the question is, okay, if I go long, well, you don't want to put your stop loss like under here because that's a lot, and it's probably going to take it. So if you want to trade this, you have to go in and out, scalping, meaning you're in profit, get out, back in profit, get out, back in. Um, but yeah, um, what could we anticipate then further? I'm gonna finish this video with this last interpretation, or I guess, yeah, idea. And well, if market were to break these prices and find a higher one, I would try to map it out on the 1 hour tops, because I mean the market does have a lot of momentum to the downside, and the news is just throughout the whole week. So any moment the market could just continue crashing down, price on gold, right? But if it were to make a higher pullback, notice there hasn't been an imbalance range. I mean the market has successfully reached every gap it's made. Gaps you can start to see from here, like this one, and all the way up here. So in your 18, almost 60. Now I think that's too much. I think that might be too high before the news come. But you do have to, for the sake of your practice and have that there, you could just start mapping these imbalance areas out, probable areas of interest, and also logical areas as well. What I mean is, well, if people say sold here and they've been trailing their profit with a stop loss, with a trailing stop loss, and they're dragging it. After seeing this, their stop loss is pretty much right above that wick. Okay, and so that translates to more liquidity, all this. So to me, if gold indeed retests this psychological level where price has failed to close within and through to the upside, which is the 1829 to 1830 range, if it breaks it, is going to want to grab liquidity just above that wick over here and then come down again. Okay, something like that. You just have to be patient and let it get there. If, however, it makes another wick like this one and closes under this range of 1829, 1830, well, then maybe it's showing us that it wants to stay within this range a little longer, for example. or that it's losing strength for this pullback, and it's gonna continue falling down at least to that lowest low, right? So you have to study what happens here. To study what happens here, you go back in your 15-minute to 5-minute time frame, and you spot these footprints. You just start looking for them. Okay, where is market creating high wicks? Where is there probable A shapes? Now, notice all these A shapes, right? This is 5-minute. If you see in 1 minute, you're going to see them perfectly. And they're very confusing because obviously now, look at this A shape. Boom. Opportunity. Boom. It went back up. That's what doesn't, that's the thing. A shape. Another A shape. Second opportunity. Boom. Back down. When I say second opportunity, it's because usually after an A shape comes a retest. It's like a little trap. People is like, oh, this is a breakout, pullback. I have to buy it to continuation. Nope, you don't. And it's gone. Same here. A shape. Oh my God, it's a breakout. Continuation. I have to buy and put my stop, my take profit here. Nope, and it's gone. Right? Once again, A shape. Over here, second pullback. Probably what could happen any moment here, because it reached this short-term resistance, might make a pullback here, right here. If it breaks up, it's gonna test this one, and so on. Okay. So yeah, now you have to study. You study what happens. So this is the range of interest. Let's weigh what happens with this resistance that it's on right now. If it breaks it, we anticipate sales here. If it doesn't, like it's currently not doing, then any position right now, for example, would be like a very short term. Let's say boom right there, and we put our stop loss obviously right here just in case. Let's go in right there and take profit. We're gonna put it there. We're gonna actually leave the profit there. Why? Because there's liquidity under this support. See, so if anyone bought here and they're seeing this, they say, okay, I'm gonna put my stop loss very comfortably over here. But that stop loss also is liquidity for market to continue going up. So you understand, you get the dynamic. That's what I just did there is is an anticipation. Like I'm just literally I'm challenging the market to do the opposite of what it's doing. Okay, don't try this at home, is what I'm trying to say. I'm not a financial advisor. This is live scalping the market, which you're getting a bonus because I usually don't do this, but just to show you what it could look like. And we're anticipating everything as is happening. So why am I putting it here? Because the market could respect that wick, make another wick, and the body close to the downside. Okay, anyway, 5 minutes. We want to study the market, what it does anywhere between these highs during 5 minutes. Okay, my favorite idea is that the market continues going up and it finds even more liquidity. Okay, it doesn't make too much sense for it to start to drop too much now. It needs, like I said, more liquidity. But yeah, that's just the way you anticipate in the market. Okay. What else? I'm gonna leave a possible bull and long idea. There it is. Look for A shapes in downtrend, V shapes are an uptrend. Bye bye. I'm gonna leave just to finish the outcome of what the market could look like if it breaks even higher. So these, if you took a screenshot or copied it as well, that could happen if the market fails to break these resistance areas. But let's say it actually fetches even higher. Maybe by the end of, let's see, this could be tonight. It's also hard to anticipate time, but within a few hours to a day and a half, maybe gold might want to anticipate a positive news for US dollar, meaning negative for gold, which could be this Wednesday unemployment change, the ADP, right? So if it's going to be positive, it might want to have a bit of liquidity up over here, and that could take from here to tomorrow. And then tomorrow morning would be interesting to see how it behaves to the downside. So what I'm saying is, if the market does not fall further down any moment, it could just retest these resistance, respecting the supports, and reaching probably psychological level up to probably 140. But I'm not sure how I feel about that. But we have to map it out. We never know. And once there, then it's gonna wanna reject pretty hard and break through all this. Okay, that could be, if this pullback extends itself a little bit more to this stronger psychological price level of anywhere between 1838. I'm gonna leave it 1838 and 1840. Okay, that could also be an outcome. I like this outcome because, like I said, it's probable that we are going to have more positive news for the dollar, and so gold, it makes sense for gold to at least make a second attempt to break the lowest low. But to do that, it needs more strength, and strength in the market means money. Therefore, liquidity. Where is the liquidity? To go down. Liquidity to go down. It's usually high, up, above key resistance areas. Okay, so this is a likable outcome. I'm gonna clear this out so you can see. Notice how, since we started talking about this area, the market has respecting it. Our short there is out, obviously, because we had anticipated at least a push to this area, remember? So, like I said in the beginning of that trade, it's just challenging it to say, okay, you're going to start falling from there. Clearly, this is the bias of respecting support, looking for this resistance. Okay? Alright, guys, I'm going to stop right there. And I hope you have a brighter, more clear picture of how to understand these type of movements. Why could they be happening? When do we find certain clues? And for what? Okay, like, subscribe, comment, share, whatever you want to do. Text me via my social media if you want or need to. And that's about it. Okay, that's about it. I'll see you guys another time.